Sound the alarms, ring the bell, call your grandma, do whatever you need to
let the world know that the old stock market hit a new all-time high. Yes, you heard me right. The S&P 500 and the NASDAQ 100 both once again notched a new record, and we gotta let the world know. Now, obviously, that's the good news. And in this video, I'll be breaking down why we hit a new all-time high and what to pay attention to in this upcoming week. But with good news, there's also bad news. And at the end of this video, I'm gonna be breaking down why I strongly believe that we're closer to the end of this move than we are to the start. And I'm not necessarily calling for bearishness, but I think we are going to get into a period of consolidation, and I'll show you the exact data that is leading me to believe that that is the highest probability pathway. But of course, before we get into all those good juicy details, don't forget to like, subscribe, and share this video with a friend. And with that being said, let's rock. As of market close on Friday, July the 18th, aka OPEX, here is the official headline. Dow closes more than 100 points lower after report says Trump seeks at least 15% tariff on EU imports. Yes, that very much does have a negative, almost bearish connotation, but on Friday itself, we did hit a new all-time high on the S&P 500, even though we closed slightly in the red. Same thing here on the NASDAQ, exact same thing. New all-time high, closing slightly in the red. So this is the daily chart for the two, but here's what happened intraday. We started off very, very strong. We got some of those reports related to the trade war, tariff war, whatever you want to call it. Then we kind of sold off and then bounced a little bit into close. That was the same thing for the SPY and the Qs. Bitcoin, as I'm filming this, around 118,000. Yes, we're going to be getting into what's going on the political side with the Genius Act, and is that good? Is that not good for crypto? I also want to point out that the individual equity as of Friday, that was looking really good. Tesla, look at it, majorly green on my watch list. Let's take a step back and get into what in the world is going on with the SPY, the overall market, and really to add a little bit more of framework to this particular video, let's not just talk about Friday, let's talk about all of last week. Why did we manage to hit new high, new high, new high? What was going on? Well, I know that the previous article was referring to the trade war and it was a little bit more bearish connotation than you might assume because the market didn't really react to it. If anything, from the trade war, tariff war front, the news was kind of quiet, but we did get other news related to inflation. We got the CPI report and the PPI report. They were pretty good. And then the day after that, we got retail sales and manufacturing, both of which were way stronger than the market anticipated, hence why we went up. It was quiet on the trade war part, but then good inflation reports, good retail sales, and good manufacturing. That, in a nutshell, is the TLDR of why we saw the overall equities market do very well as we're halfway through the month of July. Now, obviously, you might find that interesting. You might not care about it at all. It doesn't really matter because in the world of the market, you make money for where prices are going, not really where they've been. And that's why I always want to kick this off with seasonality. Remember, over the past 20 years, the seasonality for the S&P 500 in the month of July is absurdly bullish. Once again, this is the past 20 years. If we look at the past 5 years, you can see we're heading into a bullish week. The final week, a little bit bearish. And then even in looking at the last 3 years, pretty much the same thing. Heading into a bullish week and then the final week, a little bit bearish. Remember, seasonality is not the end all be all, but it's very useful to know if you're being supported by tailwinds or if you're running into headwinds. Or another way to look at it, whether seasonality does or doesn't play out, happens a lot to do with the big announcements, the macroeconomic data drops, which is why you should know Tuesday of this upcoming week, Fed Chair Powell will be speaking, and with all of that drama going on, is he going to get fired, not going to get fired? Definitely pay attention to that. Wednesday, existing home sales. Gets a little bit more exciting on Thursday when we have the interest rate decision from the ECB, the European Central Bank, and most likely whatever they decide to do, Trump's going to be using that as an opportunity to explain why Jerome Powell is too late and too stupid to be in his current position, and then we get the goods order on Friday. So it's not the most quiet week we've ever seen, but it's also not the most busy week we've ever seen with respect to the predicted data drops. If you ask me, I have a sneaky suspicion that the thing that was quiet last week, really the updates related to the trade war, are really what's going to be driving the market this upcoming week as we get closer and closer to that early August deadline. Price for perfection. Tariffs loom over richly valued stocks. We know that the overall market's been ripping, and at a certain point, it's a fair question of, are we overvaluing things? And obviously, at a moment's notice, you might get a shock to the system. EU to prepare retaliation plan as US trade stance seen to harden. Once again, the deadline is early August, so technically there's 2 weeks to figure this out, but I really think this is going to be a major aspect of what drives markets to the upside, downside, or sideways in a bit of a confusion in the upcoming week. So clearly we have some trade drama, but we also have monetary policy drama. Hal Bessent, the Treasury Secretary, made the case to Trump against firing the Fed Chair Powell. Some Republicans have laid the groundwork to oust the central bank chief, but the Treasury Secretary cited practical obstacles and economic hazards. Basically, the market, and I know this is getting into like the waters of just political left, political right, but in the world of the market, this would be seen as very much an unstabilizing decision. People don't want this, especially when you're talking about the guy who's kind of in control of the dollar, and that particular US dollar is the world's currency. But with that, I get it. It's political. People do want it. People don't want it. It's a very emotionally heightened thing. And this is obviously something that clearly can have an impact. Earlier this past week, when we were trading midday, there was all these assumptions that he's going to get fired. The market dropped, and then the reporters finally asked Trump about it. He's like, no, I'm not going to fire him. And the markets bounced right back. So yes, intraday, this could have a huge impact. Firing Powell would shatter the economy's inflation defenses. Without independence, the Fed couldn't be trusted to give priority to low inflation over the president's other priorities. Now, before we get into the final point of this particular narrative, I would love to hear from you. In a comment below, do you want Powell to say, are you here for the stability, or are you more on Trump's side of, hey, we got to get the guy out? Let me know in a comment below. But there is one thing that I really want to clarify here. From a legal perspective, it would be very, very difficult for Trump to get rid of Powell. I'm not saying impossible, but most likely it would get caught up in the legal system for so long that we would be at the end of his tenure anyway. Unraveling the legal, economic, and market ramifications if Trump tries to fire Fed Chair Powell. If President Donald Trump tries to fire Fed Chair Jerome Powell, it would set off a courtroom battle that would likely head to the Supreme Court. No one is saying that justice is fast here. It would take a while. His tenure's done in May of 2026 anyway. By the time we get these decisions, he's probably gonna already be on a beach sipping some pina coladas. Most people familiar with this situation say Powell would sue if Trump tries dumping him. Despite seemingly low chances of success, going after Powell still could serve a political purpose for Trump. Even if the Fed did cut rates, it would do more harm than good to Trump's goal of lowering finance costs on the national debt. Once again, I respect the fact that this is a very political thing, a very divisive thing, which is exactly why I want to hear from all of you. In a comment below, I want to see where the community's general mindset is at. So those are a few of the major things that could clearly have an impact on the equities market, but don't forget, we have the crypto market with a lot of news right now. Trump signed Stablecoin Genius Act. Here's what to know. What you really need to know is it adds, rules for the road. It is more of a regulatory framework for what should be happening in the world of stablecoins, and generally, this is thought to be a very good thing. Genius Act is the green light institutions have been waiting for. I, as a crypto supporter, very happy about this. I want regulators to be very clear of what's above board, what's below board. I think this is a very positive step forward. Obviously, it's just the first step and a lot needs to still be done, but hey, at least we're making some sort of progress. And just when you thought there was enough fun going on in the overall equities market and the overall crypto market, don't forget we are in earnings season. Last week was the first week. The next 2 to 3 weeks are gonna be crazy. On the screen now, you can see a little cheat sheet for all the major earnings you should be paying attention to. But kicking off the week, we have Verizon. After that, Lockheed Martin and Coca-Cola. Then you have Capital One. From there, midweek, you have both Tesla and Alphabet, aka Google, IBM, old Chipotle's in there. Later on in the week, American Airlines, Intel. Like I said, there's a lot going down. There's a good chance if you're watching this, you're going to be involved maybe with multiple of these. So feel free to screenshot it. Go to @eWhispers on Twitter/X, but please pay attention. And in all reality, if you want to make it a little bit easier, sign up for the newsletter. It's 100% free. It's always been free, always will be free. You don't have to pay for this. Every single weekend, your email inbox, I break down what's going on in the market, a little cheat sheet of the earnings. I even kind of highlight the ones that I think you're going to care about most. I give you also a cheat sheet of all the major macroeconomic events. And then probably most useful is the seasonality of each individual trading day. For example, Monday more so favors the bears. Tuesday more so the bulls. Wednesday a bit more neutral. I would say Thursday slightly bearish, and then to conclude the week, a little bit neutral, a little bit bearish. So not the most amazing week based on seasonality, but also useful to know, once again, as I said at the start of this video, the headwinds or tailwinds that you might be dealing with. And now this brings us to the most pivotal part of the entire video. The market has been on a rocket ship ever since early April all the way up to now, mid-July. The market has been rippity, skippity, doodah. And now I should let you know that I think we're closer to the end of this particular run than we are to the start. Now I want to clarify. In the long term, it pays to be a bull. In the short to medium term, well, as an active trader, there are certain things you should pay attention to. And I think right now, based on what we're seeing in the options market, I'm starting to see the signs of bullish exhaustion. I'm by no means calling for a bearish doomsday crash thing. If anything, I'm saying, hey, be prepared for some choppiness in the overall market, and it might be time to really identify opportunities in individual equities. And now, before you freak out at me in the comments below and say,
how dare you tell me that the market's not going to keep exploding to the upside?
Let me show you the exact data that I'm seeing that tells me we might be in for a breather period. Now, last Friday, July 18th, it wasn't a normal Friday. It was an OPEX Friday. It was the monthly options expiration, as in a lot of contracts just expired, and now we're going to be in that roll period. Well, technically Friday was. Let me show you what's going on. Heading into market open right here, 9:30 on Friday. You see all this purple? Shout out to Spot Gamma, by the way. That's a lot of positive gamma. But due to the expiration, these big players had to make decisions. Do they want to roll? Do they want calls? Do they want puts? Do they want to be in the market? Do they want to sit on their hands? With OPEX, you have a lot of decisions that are being made. It's not necessarily bullish or bearish. Anyway, as of market open on Friday, there's a lot of purple. That's a lot of positive gamma below the current price, which means it's very supportive. There was a nice foundational support beneath us, but as you can see, if I were to fast forward to the end of the day on Friday, a lot of it disappears. A lot of that purple that we had at 9:30 by the end of the day was not there. We're playing the game of where's Waldo, but it's where's the positive gamma, and a lot of it disappeared. That to me is a giant warning sign. And then when I look at what actually happened with the options flow throughout the day, folks, that is not a bullish trend. When you see all of this call selling pretty much up until the final 10 minutes of the day, that tells me that big money players are basically saying, we don't want to be in these bullish positions anymore. Now, am I seeing a lot of bearish positions being created? No. But I am seeing a lot of people locking their money on bullish positions, which is why I think right now, based on the current set of data, the highest probability pathway forward, maybe for next week, maybe even for the remainder of the month, potentially into August, is more of sideways chop rather than a nice trending market. But with all that being said, I should be very clear. The market's dynamic. People can trade whenever they want. It's a dynamic situation, as in the market could be here Monday, Tuesday, Wednesday, and maybe all of a sudden massive bullish positions are being created, or bearish, or maybe it stays exactly like this. I'm just here to tell you right now, based on the current set of information, a lot of bulls left the market, and we're kind of awkwardly waiting around to see if they are going to reposition, and if they do, how and where are they doing that repositioning. So putting this all together, I would say this upcoming week, my personal bias is slightly bullish, but then as we get into the conclusion of July, the final week of July, and really kick off August, I'm gonna let you know right now, based on all this information, my bias is going to go to flat neutral. Not bullish, not bearish. I think we have a little bit more in the tank for the bulls. And then from there, I think for me personally, and remember, I'm not your mom, do whatever you want. It's your money and I wish you the best of luck. But for me, I'll be looking for opportunity in individual equities and kind of take more of a backseat approach to the overall market. Now, obviously, these are all my own thoughts and opinions, and I would love to hear from you in a comment below. I appreciate you stopping by. I appreciate the good vibes. Good luck in the upcoming trading week. I'll catch you in the next one. Peace.